I think we will just start. We're just waiting for the last people just to come in and take their seats. So I would like to welcome you today to this event here at ODI on the future of the multilateral development banks. We've got a great audience here. We've got also a very big audience online as well, and that shows the strong appetite there is around this discussion on the future of multilateral development banks. A few remarks by introduction from me, just on the context for this discussion. As everyone knows, the MDBs have played a crucial role in fighting poverty and supporting economic development since the creation of the World Bank 70 years ago. And going forward, and even with the changing development landscape and the greater stress on increasing private sector investment, they will continue to play a greater role. And we saw that actually for those of us who were in Addis Ababa, when the Addis Ababa Action Agenda was agreed, the governments there firmly supported the MDBs and indeed called on the MDBs to scale up their financial and technical assistance to support the new SDG framework. The durability of the MDB's model is actually evidenced, as we'll discuss today, by the fact that there are many more actors in this field, new actors, new kids on the block. And just how many and just what they do has been very usefully put together in this new ODI briefing, Multilateral Development Banks, a short guide. Now, I know we've got a few experts in the audience, but it tells very usefully who all these, which are the institutions, how many they are, and what they do. I won't ask you how many there are, but there are 14 in case anybody is interested, and this document tells you all about it. So what are the changes that we're seeing in this field? The Asian Infrastructure Investment Bank and the BRICS New Development Bank will start work very soon. They were set up as a response partly to the criticism that the existing NDBs were inflexible, bureaucratic, and dominated by the political interests of advanced economies. A familiar criticism, I'm sure, to many of you. But one of the key aspects I think that this panel will hopefully address is whether these institutions can be complementary or whether they're actually going to be rivals. We have here a very distinguished panel to discuss this. We have people who lead these institutions, people who've been involved in advising them, and people who've been critiquing them. And I'm really pleased to announce Sushma Chakrabarti, the President for the European Bank of Reconstruction and Development, as our keynote speaker, but also on my left here, Kiyoshi Kodora, an advisor to the President of the Japan International Cooperation Agency. And you've also held senior positions at the World Bank and in the IMF. Chang-Woo Zhou is the Deputy Director General of the Asia Pacific Finance and Development Center, and that's a think tank within the Ministry of Finance in China. But you've also worked in the World Bank, and we discovered in the pre-session before this, actually, as a colleague of Kiyoshi's. And we also have Stephanie Griffiths-Jones, an ODI a Senior Research Associate. You lead a financial markets program at the Columbia University, and you'll be leading our response to the presentations. This event here is actually part of ODI's growing work on this area of MDBs, and it's led by Annelies Priesen. And at the very end, she'll just be giving you a brief outline of the scope of this work at ODI. There'll be a chance for you to ask questions, and also online. And if you want to take part online as well, please do join in. The Twitter hashtag is FutureMDBs. Firstly, though, Sushma Chakrabarti, 6th President of the EBRD. You've had a long and distinguished career. For those of you who don't know, extensive experience in international development economics and policy making, Permanent Secretary to the UK Ministry of Justice, and before that, heading up the UK's International Development Department. But here at ODI, we consider him one of ours, because earlier in your career, and maybe you'll talk a little bit about that, you were actually an ODI fellow seeing the issues of development firsthand in Botswana. So it's a real pleasure to welcome you to ODI, and the floor is yours.
Well, thank you very much indeed, Ishbel, ladies and gentlemen. You are a terrifying audience, and let me explain why. You're terrifying because there are various people here who know me far too well. I mean, starting with Stephanie, who taught me Sussex, through to people I work with and for. I see David is here, David Stanton, and Andrew Rogerson, John Burton, who I shared a room with, Richard Carey, who I fought with at the OECD. This is absolutely terrifying. It's much easier to speak to a bunch of people you don't know, actually. But anyway, it gives me enormous pleasure to be back here at ODI, and thank you very much indeed for the invitation to speak. It's always actually good for me to be back at the ODI, where I started my professional career. Not literally, of course. I actually explained to my daughter I was an ODI fellow and I was going back to ODI, and she said, "You weren't an ODI in South London, were you?" I said, no, I was a fellow in Botswana, not South London. But it was, as Ishbel said, it was as an ODI fellow in Botswana over 30 years ago that I really started learning about development. And that experience has in many ways shaped my thinking, as you're going to hear at several points this afternoon. The subject of this presentation really is the future of multilateral development finance. And now, in my view, is a very good time to be focusing on this highly important topic. So I'm really glad ODI has pushed this topic forward. This isn't just because back in September, world leaders approved the ambitious new development agenda for the world in the form of the Sustainable Development Goals, SDGs. These SDGs are, in my opinion, probably the best possible statement of all the complexities of economic development that we face today. I think they represent a credible and achievable plan of action, actually, for the next 15 years for us all. I, of course, remain a fan of the Millennium Development Goals, having been involved in their creation and then at DFID trying to push forward very much the implementation. I think they did a lot to focus the efforts of developing countries and donors on a set of common objectives. But they were always, in my view, a partial statement of the development challenge. The MDGs concentrated largely, not exclusively, but largely on social outcomes. In sharp contrast, I think, the SDGs emphasized the underlying drivers of sustainable development, as well as a wider set of critical development outcomes. So although we've now got 17 objectives, 169 targets, compared to the old 8 of the MDGs, that is, of course, a widening of the agenda, but it's probably a fairer representation of the development agenda, the complexity of it. I think it's interesting that the SDGs now focus on issues as significant as inclusive growth, inequality, building strong institutions, sustainable infrastructure, and climate change. And they're rather importantly, I think they also integrate the challenges that are faced by middle-income countries in a way that was simply not really the case with the MDGs. From our perspective in EBRD, I think it really does appear that the SDGs and the agenda that they embody have moved very much squarely into the EBRD space, if you like. The EBRD, for those of you that don't know us, we're very much mandated to deliver investment projects, but largely with the private sector. In our constitution, it says 60% of what we do must be in the private sector. It's actually running at around 80% these days. And the private sector involvement, as far as I can see, is going to be critical for the delivery of the Sustainable Development Goals. But the EBRD also works much more broadly to support the promotion of a market-based economy. We've always focused on strong and effective regulation, as well as encouraging a healthy investment climate. And just really in the same way the development discourse, I think, has been developing, so has EBRD. We've evolved too. So, for example, back in 1991 when we were created, I'm afraid it was only founding fathers at the table, but maybe that's why. Inclusion, gender, were not part of the priorities that were set for EBRD in the sense of transition to market economies. Now they are. Fundamentally, we've learned how important the gender dimension is, how female entrepreneurs need to get access to finance. That's part of the market economy that we're trying to build. Climate finance was actually, interestingly, back in 1991, part of the EBRD's remit, but in a very light way in those days. But it became very central to what we do at the EBRD from about 2006 onwards. And we're going to do even more in this area, as I'll just say in a minute. In fact, just days after the SDGs were adopted, we announced a major scaling up of our contribution to the global fight against climate change. EBRD's new green economy transition approach, this now foresees 18 billion euros of green financing over the next 5 years. That's just by us, and we will leverage in another 60 billion from the private sector internationally. So a maximum total project value of about 80 billion euros in our countries of operation, our 36 countries of operation. Now that's as much as we have delivered in this field in the whole of the last decade. So it really reflects the strategic intent of our shareholders and the institution to further scale up our activity in this area. So by 2020, we actually now expect 40% of all our annual investments to be supporting the transition to a green economy. It's compared to about 30% today. On Monday and Tuesday this week, I was at COP21 in Paris, and despite spending a long time in queues, I do actually believe that progress is being made in Paris, actually, towards beefing up the SDGs with a universal agreement on climate change. Although, as I said, I think we all recognise, I doubt it's going to be legally binding as such. So a lot of it is going to depend on implementation frameworks and incentives in countries to take it forward, non-legal incentives. So much for the goals that we've now set ourselves. How are we actually going to pay for the delivery of all these goals? Well, the multilateral development banks, the MDBs for short, will, I feel, play a very central role here. Indeed, they're one of the key engines of funding for development. Between them, the MDBs already account for a very substantial share, actually, of official development finance. And so if you're a national government and you're looking for the best return on your investment in this field, then I think the MDBs do provide a very efficient way of getting that. They are very effective, the MDBs, as force multipliers, as catalysts, maximising the use of capital, subscriptions, and the contributions that are invested in us in our partner countries. And that contribution actually is growing. You can just see that if you look at the effort to deliver the MDGs over the last 15 years. MDB support in the form of grants, concessional and non-concessional loans, risk-sharing instruments, guarantees, and equity investment grew from an annual figure of about $50 billion to $127 billion, a big growth. And as public institutions with a mandate to focus on the medium and long term, I think the MDBs are actually in a rather good place to play a very critical counter-cyclical role as well. So at the peak of the most recent global financial crisis, just to give you an example of this counter-cyclical behaviour, the MDBs and the IMF were able to boost their annual funding by up to 50%. Plans are, in fact, already afoot to continue increasing this level of financing for our partner countries. So this summer in Addis, the MDBs announced their intention to unlock more than $400 billion in new financing over the next 3 years. Even more significant than direct financial assistance is the way such support mobilizes other public and private sources of development funding, both national but also international, deepening local financial and capital markets and trying to create a much healthier investment climate to attract private capital. So, that's a nice story, really. Can we just sit back? Can we relax? Because the MDBs have all the answers? And can we believe that everything is for the best and the best of all possible worlds? Of course not. We can't. Past success, in my view, is no real cause for complacency in the future about the MDB role. The MDB's importance, I think, makes it even more vital that they now raise their game. So EBRD and the others, we need to raise our game going forward. While MDBs are a critical source of official funding, their contribution in totality is still modest relative to the overall financing flows to emerging and developing countries. We're not going to deliver the SDGs, I feel, if our approach is simply one of business as usual. I think today's new challenges in the SDGs demand much more ambition and much more creative thinking about how the MDBs work to help deliver them. They oblige us to work more closely together, but I think going beyond the usual mantras of coordination, let's have a lot more meetings to discuss what we can do together, towards actually how are we going to actually create joint platforms and work together to deliver. We really need to, I think, enhance our performance on the ground much more. We need to leverage also our substantial collective potential to maximum effect. And I strongly believe personally that we can be greater than the sum of our parts, but we need to demonstrate how in practice that's going to work. And I'm going to set out, I think, three main ways I think we can do that. There are many different channels for doing this, but let me just outline three. First, I think MDBs need to become much more nimble, much more flexible in the way we respond to demand from our clients. One of the main factors behind the creation of the Asian Infrastructure Investment Bank and also the New Development Bank, sometimes known as the BRICS Bank, or indeed other institutions you can think of, special purpose health vehicles or the Green Climate Fund, is precisely this critique that we are not nimble and flexible enough in response to what clients need. The multilateral status quo, I think, for many people, seemed far too flat-footed at adapting to new needs, particularly those articulated by the developing and emerging countries. Now, this takes me back to Botswana, of course. I made my development debut there, working for the government as an ODI fellow. And what I think struck me then still strikes me today, I think it's still very true, is that the demand side of the equation, rather than the supply side, doesn't yet get to call the shots sufficiently strongly. And we need somehow to strengthen that voice of the countries, the developing countries, emerging markets, the clients and the companies in those countries to actually set the pace of change for the MDBs. Because it's those countries, I believe, which are best placed to define what their priorities are. And I think it's the job of the multilateral system in which I sit to, we should be designing ourselves to meet those needs more rapidly, more quickly, more wholly than we currently do. And if anything, I think that belief of mine, I think, has only got strengthened of late. One, I think, very valuable lesson that we've learned when the EBRD moved into new countries, new regions, has been the great importance of listening to the client. We sort of knew this, but as we moved into North Africa, this became even more important to us, new region. We really needed to take on board their requirements, and I think it's something that all international organizations need to get much better at doing. This brings me to the second way we as the MDBs can maximize our impact, leveraging expertise across the whole MDB system. So when our shareholders asked us first to expand into Turkey and later into what we rather prosaically in the EBRD call the Southern and Eastern Mediterranean region, it's a bit of a European perspective, of course, other people call it Middle East and North Africa, but the key point was listening. Listening was absolutely vital. We didn't know these countries well. They wanted our business model. That's what we had to offer, this private sector business model. But we didn't know the cultures, the mindsets, the history, all those things, very, very important to learn. So we needed to determine what we could bring to the table and where our particular value lies relative to others. We knew we were moving into this territory where others had much more local knowledge, well-developed relationships, and a track record. Duplicating what other MDBs were doing and knew would have been pointless, frankly. But at the same time, we needed to leverage the experience of our peer institutions on the ground. So what did we do? We cooperated very closely with those who knew the territory well. The African Development Bank, under Donald Kaberuka, I think, was extraordinarily generous, actually, in sharing its expertise and knowledge as we set up shop in what had previously been their patch, really. Now, it's very interesting to talk to Donald. He and I did a presentation at the Peterson Institute last year in Washington, where we talked about this sort of partnership, where I think the phone call that was made to him by the G7 about EBRD coming to North Africa, I think G7 leaders expected Donald to be quite defensive. You're coming onto our patch. Actually, it was completely opposite. He said, we're not a private sector bank. These countries need the private sector motor. Of course we want you. And the key question is, how can we work better with a private sector focused bank like the EBRD? That's the sort of thing we need more of, I think. And that's why his bank was extremely generous and helpful to us. And we also differentiated by what we do by focusing on the private sector in our case. It's a model, I think, this private sector model, that requires a lot of time, a lot of effort, and it tends to bear fruit only after you've really worked hard at studying the local market, undertaking due diligence, getting to know clients, companies, banks on the ground. And that's one of our unique selling points. But many of our institutions have their own specific calling cards too. Some of them have particular expertise in operating in fragile or war-torn states. Others have developed innovative ways of reaching rural poor or helping bottom-of-the-pyramid entrepreneurs. Some, like us, are also experienced in developing local capital markets. financial engineering or structured products. And others have invested in incubators for innovation, pushing the boundaries again of how we operate. So there is, I think, in the MDBs, an enormous range of potential to exploit these different specialisms together. For instance, I'll just give you an instance, maybe we can debate later. Why not pool our know-how and possibly our financing, allowing MDBs to apply together tried and tested approaches in new regions or sectors? That is what we're debating right now with the African Development Bank. What about the creation of an SME platform for North Africa, where we have the technology expertise and they have, again, the country knowledge, much better country knowledge than we do. That way we could call on tools, our staff, our financial resources, I think, when we need to, without having to reinvent the wheel over and over again. The third way I think we ought to debate that MDBs can raise our game is by better leveraging private sector finance. And this is, of course, something that we're proud of doing at the EBRD. Delivering, I think, these SDGs is going to be impossible, I think we all know that, without first attracting and then putting to good use private sector investment. There's a dramatic need for greater volumes of finance for basic infrastructure, for just one example. By, I think, some estimates, the global gap between infrastructure needs and flows in terms of investment are as high as $1 trillion every year. Now, that's an enormous sum. God knows if it's the right sum, but it's a large sum, whatever it is. Only 1/10 of that gap, people calculate, can be covered directly by the international financial institutions like the EBRD. So we've got to mobilize the private sector. And here I see a vital role for the MDBs in a number of areas. 3 examples of what I mean of this leveraging, if you like. First of all, I think this is a classic, and maybe it's an ODI fellow who would say this, of course, is that I think building a pipeline of projects attractive to private sector investors. What have we learned? We've learned from the infrastructure investors that infrastructure's problem isn't just a question of resourcing. It's also the shortage of bankable, credit-worthy projects with transparent procurement procedures to invest in. So it's structuring projects, actually, so you can present them to the investors. So I'm really pleased that the MDBs have started now creating new infrastructure project preparation facilities, infrastructure funds, including the Global Infrastructure Facility. And here I think cooperation is going to be key, that we don't all chase the same projects in the same way, waste the time of many developing country actors in doing so, but try and bring these facilities together to improve the project preparation so that they can be financed, these projects. Now, as with infrastructure, I think we've also got to support the development of sustainable local sources of commercial finance. That involves local currency lending and deepening domestic financial markets via a coordinated MDB approach. In many of our EBRD's countries of operation, the SME sector, it's no point lending to them in foreign exchange. You need to lend to them in local currency. They're not trying to export their way out of trouble. They're trying to essentially produce for local consumption. So we've now started developing the whole area of local currency lending and local capital markets. And thirdly, I think, and this is an interesting new departure, that I think brings together the world of private finance and traditional development thinkers and players. It's about maximizing the private sector's contribution to development, ensuring access really to commercial finance for women, for young people, for underserved regions in many developing countries. They are generally locked out of the finance for development. And so we need to develop more credit facilities with local banks to unlock that door. One example from what EBRD has done, and I hope we're going to have many more, is what we've been doing in Turkey, where it became plainly obvious to the local commercial banks, but also to us, that female entrepreneurs were finding it increasingly difficult to get access to finance, partly because of the collateral was always property, and the property was often in the man's name. So it was extremely difficult for them to access this finance. So we had to develop a new sort of facilities which would actually use revenue streams and other ways to actually get finance to female entrepreneurs. Great success. And so much so now that we're inundated with demand from many other countries for these sort of facilities. But that's the sort of innovation that we should be doing, responding to the local needs much more. Just one word of caution, though. I think we've got to take care to avoid inappropriate concessional funding, subsidizing the private sector in doing this. That would sabotage, I think, development of more sustainable commercial sources of finance. To be clear, I think there are cases right now, where you need grant funding alongside market price loans. In fact, I'm chasing DFID for some money all the time. For example, to encourage investment in energy efficiency, or in contexts really where policies don't yet allow energy to be appropriately priced. Municipal services would be another area. But these occasions, I think, need to be quite limited and well justified. So those are three areas in which I think the existing MDBs need to do a better job than they have until now. We need to be more nimble and flexible in how we respond to clients. We should leverage expertise across the MDB system, and we should better leverage private sector finance. Now, Ishbal mentioned the new kids on the block. I use the same phrase. The AIIB and the New Development Bank, or the BRICS Bank as it used to be known. I've already noted, I think, that their arrival on the scene is a symptom of a broader dissatisfaction with the status quo. Now, will they help or hinder tomorrow's world? Will they bring new firepower to bear on our problems? Or will they simply replicate what the system already has, with all its strengths and weaknesses? Well, I stand very firmly at the positive end of this in terms of my answer. We at the EBRD, we're positively excited, actually, at the prospect of working with these new MDBs. And our dialogue with them is already very intense. It's very wide-ranging. We're talking to them about strategies, about policies, about governance, about business models, procurement, evaluation, a whole range of things. We spend a lot of time explaining the lessons we've learned from the 25 years of our history so far, and we have been absolutely clear with them. Here's what went wrong, as well as here's what went right. Otherwise, lesson learning isn't very useful. And we've tried, really, with them to talk about how to create a culture in which a project's intrinsic quality is paramount. That means ensuring assessments shouldn't be compromised because a project is covered by sovereign guarantee or there's strong political pressure to finance it. We've talked to them about processes which entrench this culture of objectivity, if you like. We've tried to make sure we don't get, how to not to get bogged down in bureaucracy, because that's one of the critiques and why these banks have been created. About having staff skilled in the actual financial structuring of a project. About practicing what we preach, about listening and learning a lot about their plans. And I have to say, I really like what I've heard so far. Just take the AIB as my example here. They say they're going to be lean, clean and green. Lean for efficiency in the AIB's processes as well as elsewhere. Clean in ethics and integrity, and green thanks to the environmental and social standards that we've worked on with them, actually. Now, these are values that any new or indeed existing institution really should aspire to. And the fact that they've been articulated so early, I think, bodes well for the AIB's future. They've said they're going to be streamlined and going to be very delivery focused. They're keen to cooperate with other MDBs. They're initially, of course, going to focus on hard infrastructure, but I think probably will move to social infrastructure later. And they're going to focus very much on the Asia region. I joke with the president-designate about what his definition of Asia is, but I find Egypt's in Asia as well, for AIB. But, that's fine with me. They want to, I think, remain some flexible. I'm very hopeful that next year we're going to be co-financing some projects together in common region. So I'm actually convinced that AIB and EBRD can achieve a lot together, not just because we have a lot of common shareholders and common countries where we want to work together, but it's the readiness actually to work with them, to be flexible, to be focused on delivery. That's exactly the same approach that I think we should have for the MDB system as a whole. And I think having them enter with a new way of operating, new governance, new approaches, I think is very interesting for the system as a whole. So I'm very encouraged by it. Now, to finish off with, I started by mentioning the debt I owe ODI. 30 years ago, I had this fellowship. Kevin Watkins joked with me before I came down that, and the career's been going up ever since. I said, no, actually, that was the height of my career, was the ODI fellowship. It's all been downhill ever since. But I think what was really important about that start to the career was the experience of development, challenges of development at first hand, on the ground, in Botswana. Botswana, as it turned out, has been one of the most successful modern development stories, I think. But it really drove my perspective, this country-driven, demand-driven focus that I think is really important to the system, the MDB system as a whole. It's my strong belief that, you won't be surprised, that this should be our common vision for the future too. And that country vision should actually drive reform of the MDB system. The MDBs are going to be central to the financing of the new development agenda as defined in the SDGs. And success in delivering the SDGs is going to require much more ambition and creativity in the way we respond to client needs. So we need to be much more responsive to do that. We have to work more closely with the private sector, collaborate more amongst ourselves, of course, both by building on our respective strengths, but also by integrating new players. And only then, I believe, can we turn what are currently the Sustainable Development Goals into Sustainable Development results. Thank you very much.
Thank you very much, Sir Suma, for that really clear must-do-better list. You have to be more nimble, expertise sharing, leveraging private finance, and in true ODI fellow style, reaching the poorest of the poor, those actually who are currently shut out of the system. There'll be chances for people to ask questions from the audience later, but I now want to go quickly to Kiyoshi. Is that a must-do-better list that you agree with, Kiyoshi?
Well, first of all, I really like to thank the ODI for inviting me to this very important subject. Because I started my career, international career, 35 years ago in Abidjan for African Development Bank. And since then, half of my time was devoted to work as a professional in the World Bank Group, country director and corporate secretary, and the shareholder of those MDBs from the Japanese Ministry of Finance for 5-10 years, and finally 6 years as a collaborator for the MDB through Japan International Cooperation Agency, JICA. So the MDB has been the really centerpiece of my professional life. Now, on the SDGs, I was in Addis and participated 4 panel discussions. But important thing is I have the 6 points to make. First, for the SDG, in-country discussion are really needed. The quantitative goals needs to be defined in-country. And there, I think that the SDG has a multi-sectorial dimension to achieve individual 17 goals. MDB has a lot of the room to play because they always have the multi-sectorial approach, the multi-sectorial platform, and they have the great convening power. So between now and the next 12-18 months, the MDB really have to help guide the country and listening to them very carefully to come up with a very credible program for 2030. I know that the joint paper by the MDBs plus IMF from billions to trillion was published for Addis. And there was an important note that domestic resource mobilization is important. But at the same time, institutional change takes time. For the better tax regime and the domestic capital market and even the universal health coverage system. So buying the time for the perfect system, there is still room for the role of the non-concessional funding from the MDBs. The concessional funding is relatively limited, so it needs to be spent for the low-income countries. But for the lower middle income and upper middle income, there is a huge gap, and MDB have the role to play in filling that gap. Number 3, PPP, yes, the Suma is right. We really have to fully mobilize the private sectors, the financial resource and their expertise. But as he said, that the Bangkok Blue project is still so few. And I have been listening and having my staff participated all the international fora discussion, global infrastructure fund and global infrastructure hub proposed by the G20 but, under the Australian chair. Yes, there is a need for the project, strengthen the project the preparation. This is already a common consensus. And I also like to cite important the facts he presented by the Filipinos finance minister. He said that there are 5 important elements needed for the better PPP framework. First, the conducive macroeconomic policy. Second, sound economic fiscal management. Third, regulatory framework and the predictability in the system. And the fourth, institutional capacity. This required not only financial, but also technical. Engineering, you have to have a good engineers. And the legal, you have to have a good lawyer to perfect the contract. And transaction managers. So this is a new area even for the emerging economy. And finally, investors' relations and the promotion activity is also necessary. The Philippines, compared to 10 years ago, they have dramatically increased the number of the PPP transactions. But this wide-ranging challenge is how to assist these challenges. This is the role of the MDBs and also bilateral like us. Now, the fourth point, global public goods. I'm relatively optimistic about MDBs and the global aid community giving incentive to the private sector for the mitigation purpose. Probably we'll come up with a good new innovation, but for the adaptation, dealing with the disaster, we need more money. And disaster risk management is one of the area which the Japanese government has been pushing during the SDGs dialogue. We need more money, but the awareness among the finance minister, particularly in the island countries and the coastal area of the Southeast Asia, South Asia, and East Africa is definitely needed. And also one more thing for the global public goods, pandemic. We saw the Ebola's case, and better coordination between the bilateral and the multilateral and the WHO are needed. And during the past 15 years, lots of the vertical institution has been created, particularly for health. And the resource mobilization in the health sector is quite successful. However, going beyond the MDGs goals, dealing with the pandemics, which is the global public bad, we need better coordination with the WHO and other the health specialized institutions like global funds. Now, the fifth point, this is the kind of dilemma. Yes, we need a nimble and flexible operation by the MTBs. But the recent report by the IMF in July, the title called Making Public Investment More Efficient. The track record of the emerging economy and developing countries in transforming their investment to the real growth is not so good. And so the fund has recommended better project preparation, more long-term strategic planning, and better infrastructure governance are needed. For instance, land acquisition schemes, and also the transparency in inviting private sector for the public utility work for deciding what type of the price should be charged for the users. So these are the very important points, but at the same time, that have to go through the political the process, and takes time. And of course, the political masters and the policy makers want to have a quick answer from the MTBs. So how to strike the balance of the most effective and efficient way of building infrastructure and the desire from policy makers to do quickly. The MDB has accumulated lots of knowledge and expertise. They have to come in as a sort of the go-between for these important challenges. And finally, role of IMF. And we all know that the 2010 IMF report reform has been blocked by the US Congress, and this is no good. And I fully understand that share the frustration from Chinese colleagues, and even my old workplace, the Japanese MOF has failed to understand that the big changing tide surrounding the Asian region, and they have no idea how to change the governance of the ADB. Now, they are now realized that they have to go for the next round of the capital increase, even after they merged the ADB's ordinary account and ADF, the concessional account. And this applies to probably every MDBs. And because we still need non-concessional financing, and MDB has a lot of the capacity, and also not only financing, but also the knowledge and the problem-solving the capacity. So as Suma has mentioned, that after the crisis of the 28, 9, 10, the most of the MDB got the capital increase. But do we need another crisis in dealing with? Before we have to face with another crisis, we really have to have the true reform in the IMF. Because if the next crisis comes under the very loose the monetary policies, the liquidities are everywhere, and it's somewhere sit in offshore market, and all those liquidities it's beyond the typical banking regulation. How the IMF and the key G7, G20 country can deal with the situation, we really have to have a good governance in the IMF first. So I stop here.
Thank you very much. Thank you very much. And just to pick up on that note of frustration at the end, on the issue of the governance of the IMF and the way it's operating. Thinking through with you, Chang-Woo Zhou, the idea of the MDBs and the new MDBs as things which have sprung out of this sense of frustration with the way these old ones, established ones, are operating. Do you want to pick up and amplify on that?
Thank you, Madam Chair. First of all, thank ODI for inviting me to be here. It's my great privilege and honor to speak with you to share my thoughts on not only the World Bank, but also the new AIIB, the new bank. It's very nice to see a lot of good friends, old friends like Stephanie, Richard, Annalisa, and also Mr. Conora. We work very well in the World Bank for the voice reform in the World Bank. And Suma, although it's first time for me to see you, but thank you very much for your nice words for the AIB. Your keynote actually made my presentation much easier, actually. Thank you very much. I would rely on some of the slides. The first, do you have sort of remote? Okay. This one? Okay. First of all, several slides I would have to go through. A few thoughts on the World Bank Group. And well, actually, I'm nearsighted. I'm wondering whether I could refer to this one. Yeah. Yes. Okay. Thank you very much. Actually, the World Bank has contributed substantially in the past 70 years. And according to my calculation, by the end of 2014, the World Bank Group has provided a large sum of money, funding resources, to the developing countries, with IBRD loan 539 billion US dollars, and also IDA 307. This is the World Bank. We are, for China, we are very grateful to the World Bank. The World Bank has helped a great deal to the development of China. And we are grateful for the funds in particular. So far we have already received IBRD loan 44 billion US dollars. And although we graduated in the 1996, but we really thank for the IDA contribution as 10 billion US dollars. But even more importantly for China, we are grateful for the knowledge. And it helps a lot to the China reform and opening policies. In the meanwhile, there are some criticisms facing the World Bank Group. It's a little bit overstaffing, And, when I worked in the World Bank, it is also my own calculation. Maybe Mr. Conrad could help me to correct. My calculation is that in the World Bank group, including the country office, including the supporting staff, there are as many as 18,000 staff for the World Bank. Too many. For example, the board is very, very expensive, to be quite frank. And it's also said it's more bureaucratic. And in the meanwhile, there is much space for policy improvement. And when we talk about the voice reform, for the World Bank Group, it has achieved a lot. However, the voting power and the shares of the developing country, including the emerging markets, are not proportionally reflected. And in the meanwhile, in particular, this is also very important to the World Bank Group. It is now in the lack of funds. And in particular, against the backdrop of the financial crisis, the developed economies, are less, willing to make more contributions to not only IDA and also support a higher leverage of IBRD. And then let me say a few words about the new bank, the AIIB. And I think the new bank will be a new partner in the international development. Yeah, as Mr. Kanda and also Suma mentioned, I fully support, I fully share. This new bank will be complement and cooperate, and not a rival to the current multinational institution like the World Bank and other regional banks. The World Bank, ADB, and African Development Bank focus on poverty reduction. However, this bank will be mandated to fund only infrastructure. And of course, the IIB is a new member, is a new partner. It cannot, meet all the needs, actually. We are fully aware of that. When we talk about what is the importance for the new bank, we say the new bank maybe add some new impetus to the reform of the World Bank and other existing financial institutions. And then you may want to see what is the major or new features. I would not say innovation. Some of the new features of this new bank. Governance structure, as Mr. Suma and Kanda mentioned, there will be no resident board of directors, at least at the earliest stages. And also fewer layers of management, not the World Bank, not the IFC, too many layers. And also voting power, more funding votes, this is more innovative for the present representation. And I think according to the current design, developing countries will account for more shares, actually. And we are going to adopt universal procurement and also universal recruitment. And also, Sir Suma mentioned, this new bank will be a lean, clean, and green. Thank you for saying that. And there will be less staffing and no such expensive resident board. And we are going to pretty small numbers of management, actually. Maybe there are similar signs to the Asian Development Bank. And again, this bank will have zero tolerance for corruption. And in particular, nowadays, high standards are among the most important features. In AIB's the future priority, it will come into force by the end of this year, within this month, and it will go into operations next year. And maybe in the first 10 years, the AIB will will focus on more physical infrastructure, including roads, bridge, energy supply, transportation, and some urban construction. But in the future, this bank will gradually expand its business to social sectors. Of course, like EBRD, this new bank will do more to engage private sectors. I would not say that. And spend 1 minute on the very recent progress for AIB. This is the timeline. You could quickly go through it. But I would say by as I mentioned, by the end of this month, it will go into force, and in the mid of January, it will. We are going to have some inaugural event for this new bank. Again, what are the major challenges we are facing? First of all, how can we raise more funds at a lower cost? This is very important, and in particular, how could this new bank obtain AAA rating agencies? We have been approached, and we are approaching to those rating companies. So far, we got a very positive response from them.
You just move through the presentation so we can.
Okay.
I'm sure people want to ask questions on it as well.
Okay, and.
That's okay. Right. But rarely does a chair get that kind of response.
I would say one more thing. This new bank will spend more efforts on doing business with private sectors, and we'll do a similar job to EBRD. And in particular, in the first 5 years or even 10 years, the EIB is expecting to do more business in terms by co-financing with EBRD, with the World Bank Group, and also ADB. Thank you very much. I'm waiting for the questions.
Thank you very much, I just quickly want to turn to Stephanie Griffiths-Jones just for some reflections, quick reflections on the speakers that you've heard here.